Like Hulk Hogan escaping the camel clutch, the market goes for the reversal. Is it all theatrics or will it stick? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that Tuesday's price action had us looking for another high and then a pullback off of that, and that's exactly what we saw. The market spiked up towards 4,600 and then pulled back for much of the rest of the day. Now the question is this a real pullback or is it all just theatrics? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the chart, I do want to go over a couple things I went over in my trading room today. And the first is that trading and analysis are two very different things. Analysis gives us what the conditions are looking for. For example, if Elliott Wave Theory is looking for a pullback or a rally, we don't just jump in and trade that. We look for the signs, the signals, and most importantly, support or resistance to break. It simply means that when we're looking for a pullback, the market has extended, the indicators are telling us it's time, and the wave counts are telling us it's time. That doesn't mean the waves can't extend. Waves 3 and C do it all the time. And usually what happens when waves extend is people get exhausted for one of two reasons. They either have poor trade management and try to guess when the pullback or rally is going to happen without waiting for support or resistance to break, or they simply give up and say the market will never go down or the market will never go up. This is a very poor way to look at the market, and if you manage your trades and emotion, you can make a lot of money with Elliott Wave Theory. Otherwise, you're just guessing or gambling. So just a couple quick tips there that we went over in our room today when things like this happen and the market extends so that you can understand how this works. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And if you want to see a bigger picture version of what I'm doing right now, you can check out Monday's video. On each Monday, I usually go over a big picture where I show you a little more of the chart and what we're expecting in a longer term count. So overall, we were looking because they came up and challenged this high and missed it by a couple points and then came back down and were weak in the pullback. That made me think we need to come back up and break this high and fix it, which they did. They came up toward the 4,600 area, and then they started to pull back to this trend line you can see we have on the chart here. And ultimately, the overall status of the market remains the same. Now, this is a nice reversal candle on the day. The daily candle spiked up and then sold off the rest of the day. So all of that is good for the bears to get started, but until they break support, pressure does still remain up. So where is our support? It's what we've been talking about for a while now. This wave 3 high here is at about 45.41. You have this wave high at about 45.39, and then these two spike lows. Overall, the number is 45.38 that they need to break. And since this is taking shape as a diagonal to the upside, we would look for sharp selling like we saw today. So that is a good sign for the bears. And you might even see a little bit of a rally, but mostly what you want to see is a short-term, very small rally. You don't want to see them challenging the highs, and then a breakdown of 45.38. And then you really should see start sharp selling all the way down to 4,500. And that's our next place of support. Okay, and then we may see a bounce there, but if they break through that, there's not a lot below to hold us, all the way down to 44.30. So overall, we're still looking for 45.38 to break. Today was a nice day for the bears. They, after a high, gave us a reversal candle and brought the market back down, but they didn't break this trend line. They didn't close below this trend line, and they also didn't break support at 45.38. So until they do that, pressure does remain up. Now, does that mean the market's going to go up? No, it just means that there are more buyers in the market right now than sellers until support breaks. Once support breaks, you'll see the sellers come in. You'll see the buyers stop out, which will accelerate the selling. And then once that happens, you'll see a pretty swift move to the downside. So as it stands right now, we would still look for a downside move off of this based on what we saw in the reversal candle. The only thing lacking today was volume. They didn't have a ton of volume on that high, but that's not a be-all, end-all of what causes reversals. It's just nice to have. We'd like them to keep it basically under this wave 3 high at 45.80 or so. I'd like to see them keep it more in the 45.70 or area or less, this resistance bar right here of hourly bars that couldn't get through there. I'd like to see them keep it under that and then break the low from yesterday, break the low from Tuesday, and then ultimately break through support at 45.38. So support at 45.38 is still the key factor. Now, once they do break support, if they give us a 3-wave move down off of the high, so if it's an A, B, C type move, Okay, and that move would take us toward overall in the bigger picture 4,300 to 4,350 or so. Then we would be looking for the B wave after this A wave. So this would be the A wave up of 5 and a big ending diagonal. The B wave down toward the 4,350 to 4,300 area would be the B wave. And then you'd get C up toward about 4,700 to 4,800, which would be C of a bigger wave A. So what that means is this move up, and just imagine this line coming off the lows. This would be A of A, and then down to 4,350, B of A, and then C of A for the A wave. Then you'd get B and C. And that pattern would take us to all-time highs and around the 4,900 or so area. After contract roll, it'll probably be closer to the 5,000 area. But 4,900 to 5,000 is what we would expect on the ES if that's the pattern that's going to play out. Now, if they give us 5 waves down off of this high, okay, so they give us a 1, 2, 3, 4, 5, then we got to be very cautious, as that does open the door for much more downside. And then the bigger C wave could play out to the downside, which again, check out the bigger picture video I did on Monday. And that would take us toward the 3,000 area overall. So the pullback tells the story. We've been waiting for it. We're starting to see signs of a pullback. They've been testing support here all week. They haven't been able to break it. If they can get through support, then how they pull back matters. Over on the NASDAQ. Now, the NASDAQ is a little bit different. They did make a new high here. But overall, on the NASDAQ, we would still be expecting a 3-wave pullback no matter what happens. And the reason for that is if the NASDAQ was going to play out to the downside, it would be a very large diagonal. And in that case, we would be looking for a very big ABC here. So you'd see a big A, this capital A, and then a B, and then C down, further down towards 14,000 or so to test the lows back over here. And then you'd see a bounce and then another big move down. And the pullback, if this is a wave 1 up here, would be an ABC because it'd be a wave 2, and wave 2 should be 3 waves. And so we'd look for a 3-wave structure in either case. So diagonals are always 3-wave structures in all 5 waves, and corrections are always just 3-wave structures. So if that's a little bit confusing, I have an awesome course called Elliott Wave for Beginners that helps you understand that. If you want to check it out, I'll talk about it later in the video. In any case, the diagonal would target much lower, like the 14,500 to 14,600 for the A wave, whereas the wave 2 should target around 15,000 to 15,200 on the pullback, and then we'd look for the next leg higher. And that next leg higher would be a 1 of 3, which should challenge these highs again, a 2 of 3 that breaks down a little bit, and then 3 of 3. And the reason this works, just while we're here and talking about it, the reason wave 3s are so powerful is the thing is you get this move up into resistance. We are at a resistance area right now. You can see that by the sideways movement, and if I zoomed out on the chart, you'd be able to see it as well. We're at a resistance area, and usually you get failures at the first try at resistance. So wave 1 comes up to resistance and fails down in wave 2. Wave 1 of 3 comes back to resistance, fails again, but fails less than it did in wave 2. So wave 2 of 3 pulls back less than wave 2 because the bulls are getting stronger. In this case, bears in the other direction, but this is a bullish chart. The bulls are getting stronger. They weaken this support or resistance rather a little more. They pull back less because they're wanting to buy. They buy the dip. They come back up, and they finally break through. And when they break through, all of the bears have to turn to longs, so they sell their position and then buy the market, which is a double buy of the market, which is why you get squeezes here, which is why wave 3s are so powerful. So this is why Elliott Wave works. It's all rooted in technical analysis. It's not just made up. It's not just guesses and games. It's all rooted in what really works with the market. You have a whole bunch of shorts up here that have stops, okay? And when they bulls break through that and the stops hit, that will cause buying of the market because the shorts have to close their position and so on. And then they want to get long the market because they want to get on the ride up. So you get a double buy there. You get a buy to close the short and a buy to open the long. And that causes the squeeze to the upside because all the bulls are buying as well. So that's why Elliott Wave works. That's why wave 3s and wave Cs are so strong, because we weaken resistance, pull back, weaken resistance again, pull back, and then break out. So this would be the bullish case. The bearish case, again, a 3-wave move that would take us down more toward the 14,006 to 14,500 area for an A leg, and then a B and C that would take us down much lower. And that would be just the start of that diagonal, which would take us down more to below last October's lows from 2022. So overall, the real key to this pullback is the ES, or the SPX or the SPY, whichever one you like to watch. It doesn't matter. They're all basically the same thing. I use the ES, which is the futures market. But if it's 5 waves, then we would be looking for a much more bearish scenario to play out. If it's 3 waves, we're looking for the bullish scenario to play out. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial. That's because I want you to get in there. I want you to make sure you love it, make sure you're part of the trading team, and it's a community that you want to be a part of before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand a market that doesn't make sense. It doesn't make sense that good news makes the market go down and bad news makes the market go up. It's irrational and it's hard to figure out. However, Elliott Wave gives you the tools and the numbers so that you understand where support and resistance are, what happens when they break, what happens when they hold, and what kind of patterns you're looking to play out, and it's all rooted in technical analysis. This gives you an advantage over most traders out there because you have the key numbers and you're not worried about what the news is because the news is irrelevant. As you can see from the comments on the screen, people are using this course and making money, and it's changing their lives. The cool part about the course is it's 25 videos in 3 sections. You get the introduction where we go over the expectations, the mindset and emotion, the Elliott KISS method, and why it works. You get the chart setup and tools where we go through every tool you need with Elliott Wave Theory and how to use it. We also go through the Elliott Wave for Beginners course where I go through each wave, what they look like, what their failure points are, how they work. I go through the theory of alternation, the corrective depth theory, the pivot. All of this stuff is incredibly important in trading, and you have it here at your fingertips. Now, if you don't want to pay the $67, I completely understand. You can get this course for free by becoming a member of one of our monthly rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts, as well as the Elliott Wave for Beginners online course. We trade the SPY and the QQQ, and we swing in day trades, so we trade quite often in my room. If you're looking for futures trading, individual stocks, and advanced training, you might want to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. The market started to give us a pullback. Now, can they follow through? Follow through is what matters here. They've got to break 45.38. If they can break down below that, we should see selling accelerate to 4,500. And from that point, we should either see a small bounce or a breakthrough of this support. If they break down, 44.30 becomes the next target. If they bounce, then we would expect that to break on the next move down toward that 44.30 area. Over on the NASDAQ, it's really dependent on the ES. We're looking for a 3-wave pullback either way, but if we get 5 waves down on the ES, that would make the NASDAQ look much more bearish, whereas a 3-wave pullback on ES continues this bullish pattern on both charts, and we would look higher toward new all-time highs. Guys, that is your market update for today. I will talk to you tomorrow.